The Fed just flipped the switch. Markets don't just move at random. There's always a trigger, a catalyst that sets off a chain reaction. And right now, that trigger is liquidity. The Fed has quietly ignited the biggest wave of market expansion we've seen in years. While everyone was focused on rate cuts and CPI prints, the real fuel for this explosion has been flooding the system. Over $500 billion in new liquidity has been pushed into the market since January. And guess what? Crypto is the first responder to the stimulus. This isn't hype, this is cycle mechanics. Bitcoin, Ethereum, HBAR, XLM, and even coins like SUI are entering critical breakout zones. But here's the twist. This bull run isn't just about Bitcoin dominance anymore. It's about the altcoin ecosystem, the retail resurgence, and the silent, powerful hand of monetary policy.
Don't forget to support the video with a like, because it supports us a lot and helps us reach other people and help them learn important information.
This is the largest synchronized market ignition we've seen since 2020, and it's just getting started. The liquidity bomb the Fed just dropped. Let's be clear. What the Federal Reserve just did isn't QE by name, but it's QE by effect, and it's about to light the biggest fire under crypto since 2020. Since January 2025, the Federal Reserve has quietly and methodically pumped over $500 billion into the system. That's not speculation. That's pulled directly from official M2 money supply data. And the moment of truth came on July 22nd, when the latest M2 update showed yet another vertical spike. You're not supposed to notice this. The headlines didn't scream, "Money printer go BRR," but under the surface, the monetary floodgates were opened again. And the numbers are staggering. Back in May 2025, the M2 money supply hovered at roughly $21.94 trillion. Fast forward to late July, and it has surged past $22.41 trillion. That's a $470+ billion increase in just a few months. That's not just liquidity, it's rocket fuel, and Wall Street knows exactly what to do with it. So where does that money go? Not into savings accounts, not into treasuries. It chases yield, and crypto, being the highest beta asset class, always catches the first wave of that capital rotation. The Fed didn't just flip the switch. They strategically and mechanically opened up multiple high-powered liquidity valves. The discount window, used by banks, has quietly ticked higher, giving institutions easy access to short-term funding without raising alarms. Overnight repo operations. These spiked dramatically starting in April, allowing primary dealers to offload treasuries for instant cash at scale. Balance sheet operations. While officially paused, asset purchases and reinvestments through the Soma portfolio have not stopped. In fact, reinvestments have accelerated post-May. This silent liquidity surge aligns exactly with major crypto milestones. Bitcoin broke its previous all-time high in April. Ethereum's daily trading volume briefly reached 50% of Bitcoin's, the highest ratio in over a year. Altcoins like XRP, XLM, HBAR, and QNT began waking from dormancy, posting double-digit weekly gains for the first time since 2022. This isn't coincidence. This is liquidity-driven behavior, and the pattern is playing out with surgical precision. More importantly, this isn't speculative, temporary liquidity like in retail-led bull runs. This is institutional-grade capital driven by macro flows, balance sheet adjustments, and mechanical triggers. This is the kind of liquidity that doesn't just pop prices, it sustains long-term uptrends. And here's the kicker. This wave of liquidity is coming right as global markets brace for geopolitical uncertainty, elections, central bank pivots, and fiat instability. That combo makes scarce, decentralized assets like crypto, particularly utility-backed coins like XRP, XLM, HBAR, QNT, and XDC prime beneficiaries. Wall Street doesn't wait for confirmation. They front-run. And with hundreds of billions of dollars now back in play, the crypto market is poised for a liquidity-fueled explosion that could rival or even exceed what we saw in 2020 and 2021. This isn't hopium. This is monetary reality. The Fed just lit the match. Crypto is the powder keg, and the detonation is already underway. Ethereum leading the shift, altcoins following fast. Bitcoin might still be the headline king, hovering near the $120,000 mark, but something much bigger is happening underneath. And it starts with Ethereum. Over the last 30 days, Ethereum has quietly commanded nearly 50% of Bitcoin's trading volume, even though its market cap is less than half the size. Let that sink in. Investors are showing conviction, not just in Ethereum's future, but in what it leads to. This is a signal, a massive one, and smart money already understands it. Ethereum isn't just another blockchain. It's the gateway, the infrastructure layer of the digital economy. Every major narrative, DeFi, NFTs, real-world assets, stablecoins, tokenized treasuries, all roads converge on Ethereum. And when Ethereum heats up, it doesn't do so in isolation. It pulls the entire altcoin complex with it. But here's the playbook Wall Street follows, the risk curve rotation. Bitcoin gets the early inflows, it's the safest crypto bet. Then the capital slides into Ethereum, the smart contract king. And once Ethereum proves strength, the floodgates open for altcoins. We're already in phase 3. HBAR is pressing up against a key resistance zone, and liquidity inflows are spiking. XLM is testing levels we haven't seen since its 2024 rally. Its 50 cents breakout target is now within striking distance. XRP just printed one of the strongest daily candle closes in its entire history, an institutional-sized move. SUI is coiling up for a breakout retest of its explosive May highs. And it's not just those. QNT, XDC, INJ, AGIX, and even low-cap AI and RWA tokens are starting to show life. This isn't a meme pump. This is the early-stage phase of a full-blown capital rotation. And the momentum behind it? Liquidity, macro tailwinds, a weakening dollar, regulatory clarity, institutional flows. Altcoins are waking up not because retail is hyped, but because liquidity is flowing like a rising tide, and Ethereum is the current pulling everything forward. The bottom line? When Ethereum leads, the rest follow. And right now, it's not walking, it's sprinting. Altcoins aren't reacting randomly. They're responding to a deep shift in capital flows. The shift that turns accumulation into vertical rallies. And this is just getting started. Alt season signals are flashing green. Altcoin dominance just flipped over 50%, and that's not a random stat. It's the spark we've been waiting for. This is the first real confirmation that capital is rotating away from Bitcoin and flowing straight into altcoins. And when altcoin dominance rises while Bitcoin stalls near its peak, that's not just a shift. That's a full-blown transition of power. Let me say this clearly. Bitcoin is no longer the center of attention. We've officially entered phase 2 of the crypto cycle, the part where smart money starts rotating capital down the risk curve. The Bitcoin maxi cycle is done. It's now Ethereum and the infrastructure altcoins HBAR, XLM, SUI, QNT, XRP that are lining up for explosive upside. The technicals? They're lining up perfectly. XRP just printed one of its most decisive weekly closes above 75 cents, with volume surging 260% in 72 hours. XLM is threatening a breakout from a 14-month macro descending wedge. The moment it clears 50 cents, there's very little resistance to 80 cents or higher. HBAR is forming a textbook cup and handle on the daily. It's coiling, and that coil is tight. SUI is now retesting its May highs and showing relative strength even when the market chops sideways. QNT has broken above its 200-day moving average for the first time in a year and is now retesting as support. But this isn't just about charts. It's the macro backdrop that matters most. Bitcoin dominance is wobbling. It's testing its final major support around 67.24%. That's the key level to watch. If it breaks down, we'll see a macro lower low, and that's historically been the ignition point for altcoin parabolas. At the same time, Ethereum dominance is holding steady, meaning the capital exiting Bitcoin isn't going to stablecoins. It's heading straight into Ethereum and alts. We've seen this movie before. In 2017, altcoin dominance surged after Bitcoin topped in December. The result? 5x to 10x moves across midcaps and utility tokens. In 2021, Ethereum and DeFi tokens exploded after Bitcoin's April peak because money rotated down the curve. And now, in 2025, the exact same structure is forming. And this time, The fundamentals are stronger, the liquidity is deeper, and institutional access is broader. But here's the biggest confirmation of all. Retail is waking up. Google Trends for altcoins just hit a 4-year high, surpassing even the 2021 mania. Meme coins, the ultimate retail sentiment barometer, are going parabolic with 10x moves in hours. Discord communities are popping off again. Crypto Twitter is loud. Crypto YouTube, back to trending. This isn't just technicals or macro anymore. It's full-on market energy. This is exactly how alt seasons begin. Capital rotation, technical breakouts, macro confirmation, and surging retail activity. And right now, every single box is being checked. If you're sitting on quality altcoins with real utility, XRP, XLM, HBAR, QNT, SUI, you're not just well-positioned, you're early. Because by the time the average investor figures this out, these assets won't be at bargain prices anymore, they'll be flying. XRP, XLM, HBAR, and SUI technicals look ready to pop. Let's zoom in on what the charts are screaming, because this isn't your average move-up. The setups we're seeing right now are the kind of structures that precede vertical, no-retest rallies. And they're all aligning at once. XRP, the calm before the $4 storm. XRP just printed one of its most bullish daily candle closes in history. This isn't just about green candles, it's about structure. XRP has now flipped a multi-year resistance level into support. If the 3-day candle closes above 94 cents with strong volume, we've invalidated the bearish thesis for good. Now let's talk upside. The $3.84 mark, though not a literal price magnet from previous cycles, is the psychological battleground. Traders remember the 2017 peak, even if it was thinly traded. Once XRP clears that zone, there's nothing on the chart. We enter true price discovery. And with Ripple's lust making headlines, ETF whispers in the air, and institutional liquidity preparing to flood the zone, $4 is no longer a meme. It's a magnet. XLM, the XRP echo that's about to roar. XLM is mimicking XRP's structure, but it's lagging, and that's exactly where the opportunity is. It's currently grinding just under the critical 50-cent ceiling. This level has been tested multiple times in 2024. Each rejection has been weaker. That's your clue. Why does this matter? Because the breakout from 50 cents doesn't just point to 60 cents or 70 cents. It opens the floodgates toward the 2018 high of 94 cents. And here's the kicker, XLM historically moves faster than XRP when it breaks out. In 2017 and again in 2021, XLM posted 3x gains in the time it took XRP to double. A 3-day candle close above 50 cents with volume confirmation could spark a parabolic rally. And this time, the narrative is fueled by Sorbonne, Palago Labs, and real-world DeFi integration. Stellar's infrastructure is no longer theoretical. It's operational. And that's rocket fuel. HBAR, the coiled spring with institutional energy. HBAR is fighting for its breakout life on the higher timeframes. It's hovering near macro resistance around 23 cents, a level that has historically capped momentum. But this time, it's different. Why? Because volume is creeping in without volatility. That's a classic signal of accumulation. Whales are loading while the crowd sleeps. If Bitcoin gets rejected from its $120,000 resistance, watch for HBAR to decouple and launch. A move above 25 cents opens up a clean run to 40 cents, and from there, price discovery becomes a real conversation. And with Hedera's enterprise partnerships gaining traction, think BlackRock tokenization, IBM integrations, and CBDC trials, HBAR isn't just a coin anymore. It's infrastructure. And infrastructure always rallies after speculation kicks off. SUI, the technical clone with breakout energy. SUI is doing something very few altcoins manage. It's mirroring the price structure of HBAR almost exactly, but it's doing it with more speed. It just broke through a descending trend line that's been holding it back since May. That breakout alone triggered a mini rally, but it's the retest of the May highs that has traders circling. If SUI reclaims $1.45 with a bullish engulfing candle, the next resistance isn't until the $2 psychological mark. What's more, on-chain metrics show exchange reserves for SUI are dropping, while wallet activity is surging. That's not hype, it's positioning. SUI isn't just a speculative L1. It's rapidly becoming a high-throughput environment for DeFi apps and tokenized real-world assets. The fundamentals are lining up with the TA, and when that happens, you don't short it, you strap in. Liquidity plus structure plus catalyst equals explosion. The charts are all telling the same story. XRP, XLM, HBAR, and SUI are primed. But what's more telling is that they're all lining up at the same time, while liquidity is flowing into Ethereum and altcoin dominance is rising. We've got strong candle closes, repeated resistance tests with weakening rejection, volume rising on breakout attempts, liquidity rotation from BTC to ETH to altcoins, retail attention coming back. All we need now is the macro trigger. And in this environment, one ETF approval, one policy shift, or one TradFi announcement is all it takes. Because these aren't just altcoins anymore, they're infrastructure for the next wave of finance. And when infrastructure breaks out, it doesn't come back for a retest. September rate cuts and the final ignition. There's an FOMC meeting on July 30th, but that's not the one to watch. The real fireworks happen in September. Why? Because that's when the Fed is most likely to introduce rate cuts. Wall Street knows it. The crypto market knows it. And the Fed is already preparing the runway. Remember, rate cuts are a signal that risk assets can go parabolic. Combine this with M2 supply increases, altcoin dominance, retail returning, Ethereum volume mirroring Bitcoin, institutional inflows, and you've got the perfect storm. The best performing assets in these windows? Historically, XRP, XLM, bar. High risk, high reward L1S like SUI. So here's the playbook. Watch Bitcoin's $120,000 level. Track Ethereum's volume and price relative to BTC. Monitor dominance charts. Follow M2 supply data. Prepare for September like it's the Super Bowl. Because when the Fed cuts rates, the crypto market is going vertical. Prepare for liftoff. Crypto isn't just bouncing. It's building pressure. With XRP, HBAR, XLM, and SUI aligning on technicals, and the Fed injecting liquidity like it's 2020 all over again, this is not a drill. Retail is back. Altcoins are leading. Bitcoin dominance is slipping. And September could be the spark that lights the fuse. If you're not positioning now, you might be chasing green candles later. Subscribe to Be Crypto Smart right now. Drop a like if you're bullish, and share this with a fellow investor who needs to see what's really going on. This is the start of something massive. Stay sharp, stay bullish, and we'll see you on the next run.